This is our Suburb Trends Report for May 2023, and we'll be looking at what property investors need to know when they're looking at investing across the country. And in this episode, we'll be discussing how to solve the rental crisis, a big ask indeed.
Welcome to The Elephant in the Room. This is the podcast where we love to talk about the big things in property that never usually get talked about. I'm Veronica Morgan, real estate agent, buyer's agent and buyer's agent mentor, co-host of Foxtel's Location Australia, author of Auction Ready and co-host of Your First Home Buyer Guide.
And I'm Chris Bates, mortgage broker, recently ranked number 5 in Australia out of over 18,000 brokers in the annual MPA Top 100 Mortgage Broker Awards. Before we get started, I need to let you know that nothing we say here can be taken as personal advice. We always recommend you engage the services of an appropriate and experienced professional.
This month, we've asked Kent to do what looks increasingly impossible, and that is to solve the rental crisis. Slightly tongue-in-cheek there, but we know that he's been doing quite a bit of research in this area of late. So, Kent, we know that you grabbed this challenge, I guess, with both hands. Can you tell us, kick us off briefly by explaining how you tackled it?
Yeah, the biggie is I've been looking at pipeline supply. So forget all the other policies, just focused entirely on building approvals. One of the call-outs with building approvals is not all of them get to completion. So looking at building approvals and then looking at the expected volume or proportion of those building approvals that will make it through to becoming a rental. How do we do that? Using rental tenure, which is the percentage of properties that are already rentals in that market. So taking building approvals over a certain time period, be it a year, be it 2 years, whatever it might be, looking at that volume and then applying a percentage, which is the rental tenure, and then looking at that count and comparing that to the existing rental stock, and you see the uplift. Now, what I'm looking for is an uplift in new rental stock or rental volume that exceeds population growth. Good luck. It is not happening. And that's really the number. And it's not happening anywhere. It's really not happening anywhere. Broad statement, but you know, if you look out at the population growth, typically 1.3% per annum, we're not there. So then what I started to do is to pull out markets where it's worse, and then it depends on how you define that. And what I've been looking at doing is looking at any market that is below 1%. Now, the ones that actually bubbled to the top probably got 1/3 of the required volume. So much lower than expected. But we've got areas where all the stars are aligned against renters. You've got significantly, probably about 1/3 of the volume needed. You've got rents in excess of 30%, so unaffordable rents, and you've got vacancy rates below 1%. It's very, very easy to find and create large lists of suburbs that meet that criteria now. And it only gets worse. So we called it out years ago. Remember we said, we've got a crisis here. And the solution to it is massive and immediate increase in supply, i.e. emergency housing accommodation. I think you scoffed at me when I said Nissan huts. We're at that point. It is that bad.
Ah, dear. I did see something, I saw on LinkedIn about these houses that have been, or dwellings that have been built in 2 days or something as emergency accommodations, I think in a flood zone.
That's exactly what we need.
All right, so we just wrap this up then now and go, right, off, go and build some.
Well, look, then we can drill in and start to look at the areas. So effectively, if you look at the ABS data, I've started to play around with the SA2 for this case so we can get a little bit narrower. And the areas that have dominated, I've created a top 10 list. Now, how have I done it? I've looked at total of existing dwellings. Then I've looked at what the rental tenure is in some of these areas. And typically, most of the areas that I've looked at that I've created a top 10 list, we're looking at an average of about 31%. So it's on par with the national average, right? Normal rental tenure. Then I've looked at pipeline supply. This is the interesting bit. I'm just scanning across the top 10 now. The expected total is only 237 extra rentals in the top 10 areas. It's just so weak. It's just so poor. So in terms of percentage, and we'll talk about the areas in a minute, we'll stay in the numbers. we're really only talking of an uplift in rentals in these top 10 areas of less than 0.5%. Less than 0.5%. So their vacancy, and their vacancy rates are currently below 1%. So really, really awful. I've got a Skype thing beaming there, so I'm going to quit that so it doesn't beep at me. And we're talking at rental affordability just in terms of units here. Rental, the average is 45% of household income. So really diabolical numbers here. Now, what are these areas? Coombaba, Gold Coast North. So in the Gold Coast, the next one is Ballina, number 2. I think we all know Ballina. I can even pronounce Ballina. Labrador, Runaway Bay, Bigger Waters. So again, all of this is Gold Coast North. Tweed Heads. The only one in the top 10 outside of New South Wales and Queensland is Mandurah. So you know that one quite well. Benora Point, Cooloola as well. That rounds up. What are we up to there? How many have I mentioned? That's 9. The last one in it was Carrara, which is Gold Coast in and around that Nerang pocket. So you can probably see there the top 10 are all based around that southeast Queensland pocket around Gold Coast. It's a big problem, not enough supply.
This is a bit weird, right? Because, there's been all this talk about the growth corridor, and we may now look like we should have egg on our faces because we've been going, don't be buying investment properties in growth corridors because all that is about development isn't actually about capital growth. But basically, this is an area that a lot of investors have piled into and not made any money for a long time. And now we say that there's a chronic shortage. Where's the mismatch? What's happened?
Yeah, look, I think the big driver of this is that you've had population growth in that area since the COVID exodus that was above the national average, so abnormal supply. Then what you've got on top of that exacerbating this is the collapse of so many builders, developers. So when you factor in interest rates going up, less investors going in, less developers going in, less money flowing through, you can see the pipeline supply issue, and that's up against population growth in that corridor. So yes, it's a growth corridor, but it's growth one way, which is population, but not enough housing stock to keep up.
Can you see here, Kent, anywhere that there's been a retreat of investors, like rental stock, in terms of is starting to decrease? Because a lot of investors have run for the hills in the last few years, in 2021, 2022, when they could get out and take their money.
There've been a few pockets. I haven't done the analysis for today, but I did this a few months ago where I looked at, and I could I could scramble quickly and do it on the screen, but that wouldn't make for a good podcast. What I do is I look at current listings that are ex-rentals. And in most cases, every time I approach this, I'm trying to find a headline. I'm trying to find an abundance of ex-rentals to create that headline. I don't find it. I just don't find it. So it's very rare for me to find, every time I've done this analysis, a significant proportion of ex-rentals suffice to create that headline article. Yes, it happens on occasion. The last time it was in a significant cluster, it was in and around Manly, would you believe? So I think it was more people just cashing in on the boom. But these areas, especially this pocket, when I was I do a lot of those yield type reports where you focus on individual properties where you're getting that 7.5% or more yield, which is worth reporting on. Tweed Heads and a lot of the Gold Coast, those villas and townhomes just always seem to be these big high yield properties. So I think a lot of investors did flow into those property types and find those rather attractive. And I think that they would get reasonable capital growth because a lot of these properties are kind of that hybrid. They're 1 or 2 story, very small blocks, pretty cheap to buy, and there's just no other options for you. So now, there's not a lot of cheap property around anymore.
So Kev, this is, while we're picking on the top 10, this isn't just the top 10, right? I think the national vacancy rate's under 1% or something. Isn't it crazy?
It is. So I've done this at an SA2 level. It's horrible. So I'm just going to do a mean average here just on the spreadsheet. So it's giving me a mean average, not a median, of under 1%. So it's 0.9 across the average SA2. Now, an SA2 is probably an easier way. It's suburb centric. So that's quite sad. Now, what I can do is I'll sort that, and you've got how many. Let's look at how many areas are under 1. There's an abundance of them. There's at least 60 of these SA2s that I'm analysing here. So it's pretty bad.
And just to put that into context, there's always needs to be a little bit of a vacancy rate because you've got churn, right? People move out, people move in. In that intervening period, there's a vacancy rate. And I think 1% is basically means you're just replacing yourself from memory. So a functioning property, the rental side of things needs sort of about 2 or 3% vacancy rate to be sort of in balance, right?
Yeah. Now,
so anything under 1 is diabolical.
I've opened up a different spreadsheet here to talk to because that list that I was just using then was very narrowed down on the select for our report. So I'm just going to zoom out to say a national level now, and I'll tell you what the vacancy rate is. So I've just looked at areas that have at least 10 listings on average. So there's significant rental markets. Okay, so looking at that, the sample size now is 916 in the list of SA2s. Now, of that, I'm just going to do that ascending now, and I'll tell you of that how many are under 1% out of that total. That is, oh my gosh, it is just huge. So we're looking at less than 1% of that sample, 254 SA2s. I've never seen anything like this at all.
So it's interesting. What's having client conversations is people who are potential first home buyers, right? They're coming to us, they're thinking about, and what's motivating them to buy is their leases are finishing and the rental insecurity, and their rents are going up. And they want to get into the market, but they're actually scared to get back into the rental market. They're seeing it's harder and harder, etc. And so I think that what the issue with this is that it's forcing people to have to buy, for example, because it's harder to rent, but not everyone can afford to buy, right? And so you're kind of creating this market where it's then haves and have-nots. It's just going to keep on getting worse. And the people who can't afford to buy are also going to find it even harder to rent, right? And so this is where we're just going to see a real social problem brewing, maybe not now, but over the next couple of years, where people are having to get displaced almost. Because if you're trying to rent in, say, that Gold Coast area, you're going to have to move, right? Because you're going to be homeless if your lease finishes and you can't rent something else.
Well, when I play around with the data, the only solution that I can come up with is the persons per dwelling. Now, that's the only thing that solves this, So to move the dial around, you crowd more people in to existing houses. That's the only option we've got as an immediate solution, followed by these emergency accommodation, because you can't just turn the dial right now. We're talking about building approvals, not completions here. So this is pipeline stuff over the last couple of years, which is well and truly short. As I'd probably say, 300% short in many of these areas that we're analysing. So you're not going to turn that around within a 1 or 2 year period without emergency immediate accommodation. And really the solution has to be multifaceted. So, we're mentioning off air before the podcast recording was build to rent. It's a very mature market in the US where there's lots of tax incentives that are based on what you're renting it for. So if we look at the build to rent market here in Australia, it's very much focused on the premium end, the top end of town. There's not a lot of affordability. Whereas if you look at what they call multifamily in the US, the multifamily market is very mature, very structured, and a lot of tax incentives. So when you think about it, we've got lots of things that are a lot of programs in place to help community housing groups, which is great. But those same programs are much broader in the US, where they support build-to-rent investors. And if you are renting below the market average, you get lots of tax incentives. So it's a massive market over there, with whole websites devoted to it. We need that. We need that level of sophistication where there's incentives for people to do fractional investment in this stuff, to do full-blown investment, for ma and pa investors to say, great, I want to build 5 units but keep them, and wow, I can do it for 10% under market rent, market value, or 20%, and there's tax incentives suffice for me to maintain that. So at the moment, though, what we've got is build-to-rent tackling the top end of town, really only focused on Melbourne City, et cetera, et cetera. They're not really affordable housing. You've got community housing groups doing a great job, but just not enough pipeline supply for them to do anything. We turned the tap off almost entirely on public housing 20 years ago, 30 years ago, and now we're panicking to try and turn it back on again. It's been too little too late for the average renter. So, what are the answers? And they have to be immediate, because it's big.
Have we got something like 1 million empty dwellings in the country? Yeah, that's 10% of the dwelling stock is vacant.
Well, I think if you analyse that, I think it was vacant on the night of the census. So the question I've got is, I don't know how valid that measure is. How
many people were on holidays that night?
Yeah, it just weren't home.
Hang on. We were in the middle of lockdown when the census was done.
Yeah.
Everyone should have been home.
They should have, they could have been out exercising within 1 kilometre of their house.
I think we would be
or not
for us
entered the
too.
door.
I think your flats, your combining people in households is probably what you'll see, right? That in other cities around the world, a place to live in London is to flat share, right? You can't afford to rent your own place. Any place to do it in New York would be similar, right? But our tax settings don't really encourage that, right? Because if you own your own home and you rent out a room, then not only do you pay tax on that rental income, but then you also make yourself liable for paying CGT on your capital gains. So maybe, some type of tax threshold that you can earn in rental income if you are, providing a room to somebody. A small change like that could happen, and immediately, because it could be, from that tax year, and that could actually, create more rooms available for people. It'd be interesting for us to get someone from flatmate finders or roommates or, that type of world on to see if they're seeing a lot of people starting to, their portal use is going up, because it makes sense, right? If rents are going up, you're starting to maybe get out of your 1-bedroom flat. Maybe you go try to join a flat share where you save yourself a couple $100 a week. So, yeah, maybe that's one part of the solution is we change the tax settings for owner-occupiers to rent out part of their place. Even if you want a granny flat on the back of your property, a lot of people think that's a great idea, but what you end up doing is, you usually destroy the value of your asset a lot of the time because you're no longer attractive to the higher income owner-occupied market who wants the backyard, but you don't get the CGT exemption, potentially if you cut the block up. So, yeah, what do you think of that, Ken, in terms of lobbying to change some tax rules?
Yeah, I think so. And that's an extension of what the sophisticated models that exist in the US for multifamily. So you need those layers. I went to my new best friend called ChatGPT, and I asked it, what examples of government incentives are used to boost investment in multifamily residential properties? So I did this morning, and it came back with governments around the world use a variety of incentives to boost investment in multifamily residential properties. Here are some examples. The first was tax incentives. So to your point, Chris, first off the bat was low-income housing tax credit, and that encourages investment in affordable housing. The next one was property tax abatements, temporary reduction in property taxes for qualifying properties. And then the third one, and I'll pause on that, is tax-exempt bond financing, low-interest loans for developers to provide through tax-exempt bond issuances. So straight off the bat, even ChatGPT, as young as it is, was smart enough to know it zeroed in on tax incentives straight up. It's only a few months old and it's smarter than the rest of us combined.
It's interesting though. I mean, now that our mainland is completely Labor dominated, I'm going to start sounding like a right-wing person now. Our Labor, our leftist governments tend to favour, tightening up on tenancy protections. And I'm not for 1 minute saying tenants don't deserve protections. They don't, they absolutely deserve safe, good housing, but also, security and tenure as well. Like there's real problems in our system, right? So I've got to be careful how I tread here because I don't want to sound like a right-wing idiot. But the problem is, however, we've got quite a lot of, legislation posed, which is going to make the situation for individual investors more onerous. And there is a little bit of, fat cat bashing out there at the moment and very little sympathy, I guess, for the plight of the investor, the individual property investor. And yet, individual property investors have in this country been the ones supporting and providing the bulk of rental accommodation for a long time now. And that seems to be diminishing too. Although, am I just talking sentiment or am I talking fact here? I mean, you did say earlier that you did look into, say, the Gold Coast is one of the contributing factors to a shortage of, rental stock there because investors have been cashing out of the market. Is that playing out anywhere in the country? Because, of course, 2021, there's a lot of anecdotal stories or commentary around people that have got out of underperforming assets at that time when they finally saw some growth.
Yeah, certainly.
Does that cause a problem?
Docklands is a great example of that. You have had a number of ex-rentals come on there when people couldn't wait to get out because they've had a bad time. Now, you want to focus on that case study is to say, okay, who was worried about landlords in Docklands who've had a really rough 3 or 4 years? So I think we've got to be careful who we blame. We want to lash out here, but I think we focus on solutions, not people to blame, because that just takes your eye off the ball.
True, but the problem is that when you start talking about tax incentives to encourage more people to either open up their houses or to invest, that then brings out that same old argument, which is you don't want to be helping these people line their pockets and feather their own nests. You know what I mean? And it's like, okay, but do you want somewhere to live? It's a tough one though, isn't it? Because philosophically and psychologically in this country and also politically, there's quite a lot of division here. And it's like the same people that are crying that we've got this crisis. At the same time, in many cases, I've read articles. I mean, I've listened to interviews. At the same time, they're saying, but landlords are greedy. Landlords should be putting the rents up. Landlords should have to cap rents. Landlords should have to do this. Landlords should have to do that. And, that's not solving the problem, is it?
Well, I think tackle one thing at a time. If we're looking at, is there a valid criticism for how much rents have been rising? I just did a quick analysis and I found that, give or take, the average rental market rose about 2 to 3% above CPI. So CPI was what? I think it was 7.8% for the 12 months. I just quickly did a search on it earlier. The average rent increase was give or take around 10%. So there is a gap there. So is that criticism valid? Yes. That gap between...
Yeah, but the gap isn't... The gap isn't about greed. That's about market forces and about
correct.
Supply and demand, and the fact that that rents are going up because there's a shortage of stock.
Yeah, but if you wanted to tackle that, then you just tackle that issue. You wouldn't put an arbitrary rent cap on it. You'd peg it to CPI, for example. You just say you can't raise it above a certain threshold above CPI with some tolerances. If that tolerance is 1%, then the gap really you haven't really stretched above that gap that much. So that would be my call out on that these rent caps have a risk though. We don't want to scare people out because it's got to be a multifaceted approach to this. My numbers are pretty simple. New housing stock times rental tenure equals the percentage that's going to become a rental property. Now, usually, if you're building units, a higher proportion of units become rentals. So if you look at the areas there, causation, correlation, I get that. But in most cases, a medium high density build is going to end up a much higher proportion of rentals. So that's a good thing. But you can build all sorts of incentives around that as well and focus on infill areas, get government incentives in there, get tax incentives, and get the government active in building a lot more. I mean, the government's front and centre should be building a lot of public housing.
I always wonder how bad this would have been, though, if Labor did win, the 2019 election, right, and negative gearing up was unwound, and capital gains tax exemption was increased. You would have absolutely seen investor lending drop, right? Because, it's not as enticing you can't, especially as interest rates went up, you'd have all these people who would not be able to claim all their negative gearing, right? And investors would go, well, I don't want to go into property, the capital gains isn't as... So, and that's what, it's already starting to come back in the papers a little bit. Obviously, Labor in the market, Liberal now maybe say they'll use it as a policy, etc. And it's still one of the things that people call on is that, we've got a housing crisis, let's get rid of negative gearing and let's increase capital gains tax. But what we're saying is we actually need to increase investors in the market to provide more rental housing to help us solve our rental crisis. And that goes in the face of housing unaffordability, right? So, yeah.
I think it can't just be one solution. It needs to be multifaceted. So we don't want to lose in private investors. We want those, but we need a massive surge in affordable housing. And investors aren't incentivized to actually have a cheap rental right now, whereas in America they are. So that would be part of the program. So
it's also the planning, though, isn't it? I mean, the problem is that lots of supply needs to come into the market. It takes time. It takes, 2 to 4 years to get a new development off the ground and finished. In that time, you've got to find builders, you've got to find materials, you've got to find buyers, you've got to find, there's a lot to be done. In the meantime, building Nissan Huts, and we're actually incentivizing people to rent out their spare room. You're trying to find those 1 million vacant properties in the country and think, are they really vacant or not? And if they are, then disincentivize people to leave them vacant. So that, there are some things that you can move the needle potentially straight away, because the fact is that building is going to take time and we have a resource shortage. So capacity shortage, in terms of actually building it. So we've got to look at these shorter term solutions that you're coming up with, Kent. And, obviously the tax things, well...
I think that's interesting too, that it's actually self-fulfilling in that the incentive for somebody to take their property off the long-term rental market and make it a short-term Airbnb, once it gets to below 0.5% vacancy rate, they realise that, wow, I can charge $700 a night for my fairly average condition property in Upper Hunter Valley. That's what's happened. That's Muswellbrook there's an example of it is, my cousin just moved into a property while they're getting theirs repaired, and it's $700 per night as an Airbnb. And
cool.
Yes. So you can, the returns are phenomenal, but that's because there's nothing else available. So the insurer could only place them in an Airbnb for a few weeks while this repair work's underway. So that's the other problem.
Now, and look, I've got to be careful here because, I've got an opinion, but I also recognise that my opinion is probably not based on fact and definitely not based on data, verifiable data. And we need to interview somebody on this, because I guess we need to get some hard information around how much of the longer term rental stock has morphed into short-term rental. There's that whole argument that people are entitled to obviously maximise the return on their investments, yes. But at the same time, that is getting into that sort of greedy fat cat territory, I guess, isn't it? When you really take it away from the long-term market, because you are able to maximise on those short-term gains. So it's sticky territory, but and there also are limits to how in Airbnb or New South Wales anyways, limits to how many nights a property can be made available for Airbnb. So even if, you got 50% vacancy or however it works, that, you can only occupy it or offer it to the short-term rental market. I think it's for 50% of the time, I think. Don't quote me on that because I can't remember the exact legislation. But say it's half the time, and say you're charging way more than twice the rent, and your costs are higher as well. But if you are well in excess on the rental income on that, then people are going to do that, right? So talk about incentives, because that's what people do. Follow the incentives, follow the money, I guess.
Yeah, exactly.
And that the rental crisis itself is actually creating a ripe scenario. So it's almost like it's self-fulfilling in a way. Do you know what I mean? If you've got a shortage of rentals, then you're gonna desperate people will desperately pay if they can afford it to take something short term. That pushes the demand up for that. You know what I mean? Like,
That's
so this is
point.
sort of all feeding into the same problem, right?
Yep.
Yeah, it makes sense, right?
I thought I wanted to gravitate back to these other incentives, so the chat GPT output. So we had tax incentives, we'll cover that. What I also said is grants and subsidies, and it looked at different investment partnership programs, community development grants, and affordable housing trust funds. Now, it seems very similar to what's already happening with these community housing groups, but these guys have been starved for supply. So they've got these brilliant frameworks. I met quite a few of them over the years. They've got the systems in place, but they need to have triple the output of what they've been up to. There's just not enough there. And then there's a couple of extra things here. The zoning and land use incentives. So one of the things it mentioned was inclusionary zoning, density bonuses, and reduced parking requirements. So there's a couple of things there. Expedited permitting and reduced fees. So streamlining the permit process. We're a bit slow on that front. PPPs, private partnerships, private-public partnerships, loan guarantees and financing programs. So that was some of the things it spat out as, and it was a really well-written research article done in all of 2 minutes flat out of ChatGPT. It was just amazing. And I'm thinking, you know what? It's not a lack of knowledge or know-how. What is it? Why, you can find the pathway forward.
Clearly.
Yeah. You can go click and there you go. There's your framework. What's going on?
Well, I was just literally watching something that you sent to me, Kent, about our federal parliament. So we're recording this in the beginning of April. We won't go to air till May. But federal parliament at a bit of a stalemate because the Labor government can't get through housing policy. It's going to bring in, I think, something like 20,000 new dwellings, which is like a drop in the bucket anyway. And, the Libs are getting in the way of voting for that. I think the Greens have got something to do with getting in the way of that too. I don't quite understand. But, at the end of the day, we've got political problems. It's not, we're not getting bipartisan support to actually solve the problem. And, what do you do?
Well, it shouldn't be. This should not be political. It should be bipartisan because it's going to bite.
It shouldn't be.
It's going to bite every politician on the backside because it'll happen not in their term. The problems will compound and pass over to the next term, which will probably be your term. So make it bipartisan now.
Well, they're happening now. I was actually on LinkedIn and I discovered that New Zealand's got exactly the same issues. I was reading this feed and I was like, oh, it's not even in Australia. This is actually in New Zealand. And then I commented and the people behind that were like, oh, are you having the same problem? Yes, we are.
Yes, we are.
Very similar causes. Very similar causes. It's phenomenal. But the thing is, there's a lot of talk about it. But is anything actually happening?
Not at a scale. Not at scale. And that's the problem. While we're opening up the gate, you're getting a well and truly above 1% population growth, whilst our pipeline supply is well and truly below 1%. So the gap gets worse while you're opening the gates up there. And I think there's another fundamental problem here is where we live is a big part of it. If you look at the geography of Sydney as an example, what an awful place to keep growing because you've got waterways everywhere. We're building along this coastline, and that made sense when we used the sea as our freeway. But really, we should have migrated inland quite some time ago. Albury, freshwater supply, areas that you can build. We need cities like that. We need another 2 or 3 or 4 Canberras. And Albury's a great example of one that should be a Canberra right now. So I think that there's some of the big issues. Even pick on Canberra. Canberra's constrained now. It's pushed right out to its boundaries and needs to acquire extra land from New South Wales. That's crazy. If you look at it, you say, this makes no sense. That line is a man-made line. Pardon, I didn't mean to be sexist there, but you know what I mean? We do some really crazy stuff. So, yes, we built the city in the right place, but we put some really artificial, silly constraints on where you can build and whatnot. But places like Albury should be
we can build up.
Build up, that's fine. But,
so we can correct.
Yeah, but you got to zone it straight up. You got to zone it from the outset for medium high density, and to try and do it through infill, and then change zoning and upset neighbours and NIMBYism. It's not on. And pick on Newcastle. Pardon that. There's someone at the door, dog barking. So yeah, I think we're trying to do all these little infill things, and I think China got it right. China builds a train track into a city like Xi'an, and the train track's all underneath, and they build out the city, and then they move the people in. They do it the right way. There's the answer.
I think one of the problems with the whole rental affordability crisis is you need investors to come back. And I've just brought up some stats from AFG, which are one of the big mortgage aggregators. They've got a very good report called the AFG Index, and they release it quarterly. And what's good about it is it has the history of lending lodgements, right, and the percentage that went to investors and how much was actually lent per month, etc. And all the way from 2013 to 2018, 2017, let's call it, investment lending was 35 to 40% of total lending, right? So it was a big portion of the lending. And then when you go to sort of 2017...
In what period was that, Chris?
2013 to 2017.
That was a 1 year.
4 years, 2013 to 2017, it was just really strong, right? 35 to 40% of new lending, right? And but as soon as you get to sort of 2017, 2018, 2019, 2020, it starts to drop, and it's almost the average is 21, 23, 25, and it's sort of jumped up to maybe 27 now. But it's, that extra 10% is huge, right? Yes, first home buyers have increased a bit, they've gone up maybe a few percent. But, that investors pulling out of the market is really what's causing the rental issues now, right? Because less and less percentage of the new properties...
crowding out. They've probably been crowded out. First home buyer incentives have effectively crowded out that proportion of the market that would otherwise be there.
Well, also lending restrictions, that's really what triggered it back in sort of 2015, 16, right? And then... obviously now the interest rates are rising. It's more expensive. You got less borrowing. you less got borrowing capacity, et cetera, et cetera. And there's also, with booms, investors tend to be last of the party as well. 2021 was a very short boom, so I don't think investors really got time to jump on before everything slowed down in 2022. So this is sort of interesting. But I think too, when you look at our situation, it doesn't seem to be able to improve in the short term. So in a human sense, where are these people living? You sort of see every now and then in the news, you've got, one person, they've got this story about what they're doing. But, at the end of the day, these are a lot of people that are having to find alternative accommodation. I don't know if I'm asking this, I don't know if we've got the answer in this podcast today, but who's tracking what they're doing and where they're going and where they're living? Yeah,
the ABS are tracking homelessness, though. Yeah, so there is some data set which I should have grabbed it before this, so I apologise for that. But there is a homeless data set from the ABS, and I think it's interesting though what homelessness. So what's the definition of homelessness? Well, it could be. Though? I think it's anyone who isn't on title or isn't on a lease. So if you're lounge surfing or couch surfing, you're homeless. So I think that's the broad definition. So I think there's going to be a lot of people classified. If you're living with your parents. I'm not. You've gone home to live with your parents. I'm not sure on that. So so I should have done my homework. That would have been a valid point. So I'm not really up to speed on the clear definition of homelessness. We should all be. We should be. Because we got a situation, we got, immigration's on the rise, and obviously lots more students coming back into the country and all the rest of it. I know that there is dedicated student accommodation that isn't necessarily part of this story. I'm not sure
what percentage of students are or overseas students are accommodated in such accommodation. So I'm sort of talking out my hat here. But, our government, we've got a labour shortage, so we need people, and this is the irony, then we need to actually import people to build the housing for the new people import into the country. You know what I mean? It sort of is a bit insane in many ways.
I keep on looking at what's happening overseas, and there's so much more happening with prefab. There's so much more happening with 3D printing. They're setting up the machine, and the machine can work 24 hours laying down the composite, the equivalent of a concrete wall. And this seems to be going ahead in leaps and bounds in the UK and the US. And it's like I'm watching a couple of companies in Australia that seem to be doing some interesting things, but it doesn't seem to be getting anywhere near the traction or attention or investment that I think it needs to truly move the dial. But it seems like America, for all its faults, is really doubling down on this. Affordable housing produced in a factory, shipped out, building a whole estate in 1/3 the time it takes us to do it.
I wonder if this is also going to play into a lower number of people downsizing, right? Because it makes sense if you're in your sort of maybe in your 50s/60s, and your kids have sort of gone through uni, but now they can't have issues with rental accommodation, or they can't get their first home. They're more likely to want to come back to the home, right? And so, the person might have said, well, I'm going to downsize from my house and buy an apartment. The kids are sort of grown up now. I don't need the space. But maybe they're like, well, we need to have that option there just in case the kids need to move back home. I wonder if, the parents are going to start to burden a lot of this rental stress because they know how difficult it is for the kids to, A, afford the rent, but B, actually even get a place to rent.
Well, that's what I think, Chris. We won't see it until the next census. So we're, another 3-4 years off from seeing it. But I think the variable of interest will be persons per dwelling. So that's the only thing that seems to be able to move to resolve this.
But so the RBA released some research that showed that the composition of dwellings was changing, right? So there's less people per dwelling. And obviously with work from home and the whole rest of it, there's more, everybody wants more space in their dwellings. So therefore, the same amount of dwellings is not going as far as it used to. So that's another contributing factor to this as well. And I guess we're all affluent enough to be able to afford to live in places that are technically too big for us, or perhaps. Maybe that's...
Yeah. The McMansion thing was big, wasn't it?
Yeah. But even with lockdowns and working from home, and even this continued sort of work from home hybrid model, then, the very first, I think we interviewed... was it Alice Stoltz from Domain very early on in the first lockdown from Domain, and she was saying that the term, home office went up something like 800% at the time in the search terms. And I remember some period later talking to her about that, and I don't think it had gone down. I think that, and even now when we talk to clients, what they're looking for, and they need that space for that home. I mean, that one extra room, for instance, probably takes a bedroom out of each dwelling, or a person out of each dwelling. So, this is sort of our way in which we live now. This is the knock-on effect of changing, this sort of more structural changes, I guess, as a result of the pandemic. And I know I talk about this a lot, that some things have changed forever. I'm trying to work out what has and what hasn't. But this does seem to be playing into this problem. So a short-term solution is send everybody back to the office.
But it's interesting how it's impacting the data sets that I normally have been playing with for these years, is that the rental market is so strong that it's effectively overplaying a lot of the metrics that would otherwise build a scorecard for an area. So what I mean by that is if you're building scorecards or looking at a spreadsheet to determine where should I look to invest, what's happening in the rental market is really starting to jump into and play with a lot of these models in a much bigger way than it ever has before. So your yields, for example, it's opening up suburbs that you may not have looked at over the last 10 years or more because they didn't have those types of yields in the past, or property types, etc. So, yeah, there's a lot of people now starting to explore investment areas that you wouldn't traditionally classify as an investment area.
So that's a little dangerous, right? I mean,
That's
it could
why I
be
raised
that,
it, yeah.
this is a permanent, this is a permanent change and these areas from henceforth are going to be great places to invest. Or this, for the unwary who don't realise because they haven't been around long enough, won't get that this is actually an anomaly. And we love talking about anomalies with you. This is an anomaly brought about by unusual circumstances, which in the big scheme of things won't last forever.
That's my point. So the metric of interest is the affordability, and it's effectively looks at rents and the proportion of household income being allocated to rent. So what we're finding is a lot of areas that have had a huge surge in rent have disconnected significantly from local income. And what we've learned from, say, the housing market, we're picking on the Richmond Tweed coastal, or we're picking on the South Coast, for example. Remember, we were talking in this last podcast where they became dependent upon Sydney money to prop up these very, very, I'll use air quotes, artificially high prices. Similar scenario that I'm calling here, my theory is that you've got prices being propped up in a similar way by people saying, look, doesn't matter. It's only going to be, we need a house. Let's spend 40%. Let's just spend 40%. The question I have is spending 40%.
Or let's just move to that area for as long as this lasts for.
Yeah. And so what I'm saying is it sustainable? And I would argue that you get up above 40% of household income being spent on rents in a given area. I'm going to throw out the argument that that's not sustainable. If you are investing in an area chasing yield and you're looking at the numbers without giving respect to affordability, you might be taking a bit of risk. So if you're in a market where suddenly, as a percentage of household income, rents are getting up above 35, 40% or higher, my theory is that that's not going to be sustainable, and that could come back closer to that 30% mark. So those excessively high rents, how do you measure an excessively high rent? The only thing I've got to measure it against is household income. So the areas where rents start to get up to that 35, 40% or higher, I'm going to throw the argument down that won't be sustainable. So if you're investing without paying respect to that affordability metric, I believe you're taking a risk.
I love that, Kent, because the problem is the yield is so attractive. It's very compelling, isn't it? When you see that going up and you think, and yet we hear it spruik, across the board. So, introducing that affordability metric is a really pragmatic way of testing whether that yield is fool's gold, I guess.
Exactly. And the flip side of that is looking at the areas that are best for a build to rent who's aiming for that top end of town. You'd focus on areas like your Bondis, or you focus on Paddington or Melbourne East. So I did a report of the top 10 build to rent locations, and I used the opposite of that. I looked for the areas that I ranked them on the areas that were spending the lowest percentage of household income on rents. And, the best ones had 23, 24%. Yet they still had low vacancy rates, etc. And what was the driver? The driver was high income.
Interesting. And also with those build to rent, I mean, if they are targeting that higher end of the market, they're going to be brand new properties for starters, certainly off at the beginning, and they are going for a sort of a higher end of the market, you would assume they're going to take some of the tenants out of existing stock that might free up
exactly
some of the existing stock for other, and that will put downward pressure, of course, on rents in those other areas.
It's all supply. Supply at the top, supply at the middle, supply at the bottom end. So I kind of divide it into three. Build the rent coming in at the top. In the middle market, your ma and pa investors. We need them in the middle. And then we've got government, ideally government and community housing groups coming in at the bottom. So that, that multifaceted approach. But what we should probably be doing is focusing on that middle by adopting some of those policies that are used in the US, offering a much broader array of incentives for build to rent to make them affordable. And I think we're missing that bit.
Yeah, I think what I'll probably do is try to get someone on from Flatmates or, Flatmate Finders, to basically see if we are seeing an increase in people trying to rent out rooms and come and join housing. I think that would be interesting to get some data on the ground and maybe even get Kieran from Made Comfrey on the Airbnb front. I mean, it's been a couple of years almost now since they changed all the rules in New South Wales around a day limit, and has that, or that story you're talking about in Muswellbrook, is that starting to really increase? Is the rental stress leading to higher Airbnb prices, not so much, tourism and the 180 day cap, etc. So maybe that's part of the solution, is actually allowing that cap to extend, because if they're going to do it, you might as well let them rent it out the whole year rather than forcing them under this cap. So,
well, actually, you can, from memory, you can rent it out, say, for 3 months or 21 days, or is it 3 weeks, 3 months, whatever. Anyway, for a month, for instance, and it does not include it in your 180 days. So there are ways that they could have it occupied all year long, which is
a mix.
It's just, we love these philosophical chats here. We love to sort of get into the data and the nuance of it, and rather than just the headline variety, and particularly appreciate your insights, Kent, as well. We love these chats. But I guess from a practical sense as well, in terms of our listeners, we're guessing you quite like these chats too, otherwise you wouldn't be tuned in. But, we just always at pains to, there's going to be some temptation to invest poorly, I think, in the next few years. There's going to be lots of property to invest in. There's going to be a lot of talk about high yield. There's going to be, obviously, easy to rent out properties. And so I guess we need to be much more discerning in terms of our individual investment decisions, not to get sort of swept along with the tide of this. And yes, we want to help solve the problem, but, if we're individual investors, we've obviously got to worry about our own financial future, which is why we were investing in the first place. But it's, I think, always good to understand what's happening in the macro level, when we make our own micro decisions, which for us are macro. They're macro in terms of our own life, but they're micro in terms of the whole scheme of things. And these big movements can sometimes create opportunities, but we've got to be careful. We're making one bet per purchase whenever we buy a property. We're deciding on our thesis and what we're going to invest in, and we're gambling on that effectively. So we've got to be very careful. And I think there's going to be a lot of sort of arrows pointing in directions that perhaps might be tempting people to invest maybe unwisely. So we've got to be extra discerning, is my thoughts on this.
If you have a question that you'd like us to answer in an upcoming Q&A episode, you can send us a voicemail or written question via the website, theelephantintheroom.com.au, or you can email us directly at questions@theelephantintheroom.com.au. If you like what you're hearing, please share this episode with others you feel would benefit. And while you're at it, why not leave us an iTunes review? 5 stars would be great. I know that sounds a bit cringy, but we have it on good authority that every review helps make it easier for other people to find out about us and hear what our amazing guests have to say.